Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Monday. Hopefully everybody's having a GGD, a great green day in the market. You know, I always wish the best for my viewers and subscribers. So guys, today we're going to look at the overall portfolio. I'm going to look at the individual metrics, of course, the stocks and how they're performing today, as well as my watch list and why I switched out Visa for Aflac. So jumping in for today, we are up right around $133. The 1 week mark, we are down $403. The 1 month mark, we're up $460, up about 1%. 3 month mark, we're down $1,500, down about 3%. Year to date, we are only up $160 or 0.32%. Then the 1 year mark, we are only down $357, pretty much down 1%, but might as well be break even there. And then all time, since I believe it's April 2018, we are up $15,340.34 or an accumulative 43.5% return all time. Gotta love that, guys. Short term, the market is a weighing machine. Short term, it's a voting machine. Long term, it's a weighing machine. That is a quote from Ben Graham, which just means opinions are what short term fluctuations are based on. People jumping in and out of stocks, whatever's been going on in the news. But long term, as long as you buy the right companies at good prices, great companies are phenomenal companies at great prices, and the earnings are growing and it's a low payout ratio for the dividend, and management's competent, and they're doing good things with the money, as in investing in profitable businesses, returning extra capital to shareholders, and maintaining the business at a good level, odds are your stocks are going to go up and your net worth is going to grow over time. So, guys, let's jump into the individual positions here. First, with Realty Income at 62.24. Close were down today. 143 shares, $8,900 worth of market value. Average cost is around $67 per share, so a nice cost down average opportunity here for a great dividend aristocrat. So a nice deal on Realty Income. About 17.6% of the portfolio is in Realty Income. Today we are down about $86, down about 1%. Total, we're down about $700, down 7.24% on Realty Income. So this is one of those that I would cost down average into if I had the extra income. Right now I currently don't, but I'm working on getting extra hours at work. So hopefully that can, extra hours come in, and then I can not only live a little bit better, but I can put a little extra cash into the portfolio. Next, we've got Coca-Cola, which is up today about 20 cents. 10 shares, $643.50 of market value. Average cost is around $61 per share. So we are up right now on Coca-Cola. 1.3% of the portfolio is on Coca-Cola. Today we're up $2. Total, we're up $35 or 5.76% on Coca-Cola stock. Now, guys, this is one of those that I do want to add another 90 shares of by the end of the year. But as of right now, I have to sit and be patient. I don't have a lot of extra cash to be putting into the market right now. But if I did and Coca-Cola made sense, I would be putting money into it. As of right now, there are just better opportunities to put money into other stocks. Next, we've got Altria, closed at $47.75 today. 315 shares, $15,000 worth of market value. Average cost is right around $47.30. Portfolio, 30% of it is in Altria. Today we're up $75, about 0.5%. Total, we're up $130, or up nearly 1% on our position. Guys, this is one of those that I'm happy to see that it's a little bit up. I don't want to put any extra cash into this position. First of all, I love the business, but I don't want to put extra cash into the company simply because it's such a big position. And I'm up on it currently, and there are a few glaring deals. Realty Income, and I believe T. Rowe Price is still a good deal as of today. But that might change. Everything fluctuates, and there will be a time where Altria is a better deal than, say, Realty Income. It'll just take time. Next, we've got Apple, which is down only about 30 cents today. Only one share currently, $169 worth of market value. Average cost is right around $133 per share. 0.33% of the portfolio is in Apple stock today. Total, we're down 30 cents. today we're down 30 cents, and total we're up nearly $37 with a close to 28% return. Guys, I gotta tell you, Apple is one of my favorite companies. It's honestly one of those that I've wanted to hold for a long time. I thought at around 133 was a great buy. Currently, I still think it's a great buy, but I don't want to cost average. I want a dollar cost average, not cost up. I want to cost down. So, as much as I love Apple, I just watched the Jobs movie with Ashton Kutcher. I think it's one of the best movies ever made. They did such a great job telling the story of Apple and how he was kicked out of his own company and pretty much bought back in. He ran Next Generation Computers, and they got bought out by Apple, and then eventually he pretty much kicked out the board and made himself CEO, which I thought was pretty badass after getting kicked out of the company like that. Overall, just love the story, love the products. I do editing and stuff on an Apple Mac. I've recorded music on MacBooks, so I love Apple products. I love the brand. I understand the consumer behavior and the loyalty to the brand, and I think it is the most valuable company in the world. But when it comes to brands, I just don't think it can be beat. So I think Apple has a lot of pricing power, has staying power, and a lot of customer loyalty, and so I'm happy to have it in the portfolio. Wish I had a few more shares, but just dipping into one share at a great price. Hopefully in time, this will mirror something like an AbbVie or a Realty Income with dividends, but it will take a lot of capital, so I have to be patient, and I'm willing to do that with the quality company that is Apple. Next, we've got AbbVie, up today about $2.60, 95 shares, $14,000 worth of market value. Average cost is $95 per share. Around 30% of the portfolio is in AbbVie. Today, we are up around $250. Total, we are up around $5,560. We are up 61% today. And the dividend coming in on May 15th. Today's the 1st. So, So in about 2 weeks, we're going to get $140 deposited into our brokerage account for doing absolutely nothing. So I love AbbVie. It's one of my bigger positions. I wish it was a little bit larger, but just like with Apple, I've got a great return. I'm just going to let the money sit in there and compound. And if the opportunity arises, I've been waiting on it for like 2 years now. It hasn't dropped even close to my average cost. But I'm going to patiently wait, just like with Apple, and really let the money compound and work its magic. Let compound interest do the work, and let me take advantage when it makes sense, right? Then T. Rowe Price. We've got a pretty big loss on this. I already know that by looking at it, just because I know my average price. But closed today at $111.31, down $1.08. 101 shares, $11,242 of market value. Average cost is $121.60. 22% of the portfolio is in T. Rowe Price. Today we're down $103. Total, we're down over $1,000, down about 8.5% here on T. Rowe Price. Guys, this is the best deal and has been for months in the portfolio. So I bought a share with dividends. I did have about $350 in dividends in the portfolio, but I actually transferred, for the first time ever, I've transferred out of my portfolio those dividends because I needed the cash, honestly. I needed it to help cover rent because my hours have been pretty low at work as of right now. But I'm working on changing that as soon as possible. So first time I've transferred out, doesn't feel great, but you got to do what you got to do, right? So I'm happy that I've built up a dividend income where, on times like this where I'm short on hours or I'm sick or whatever comes up, family needs a little bit of help, whatever I can do to help. I'm happy that the dividends are there and that I've busted my butt enough that, and when times are rough, that I can dip into it a little bit. Because it's free dividends, right? Like, it's money that's I'm gonna get it next time too. Like, I'm gonna get it the next quarter that Altria pays, so I'm not super worried about it. I am a little bummed because I wanted to buy 3 more shares of T. Rowe Price, but I have to be patient. I'm gonna try to get more hours or get a new job, depending on whether or not they can give me the hours that I need. So right now I'm kind of taking on as much as I can, but I still don't have enough. I mean, I have enough to cover my expenses, but I'm a little bit tight when it comes to the belt right now. So I'm just gonna have to pull out a little bit of money. Hopefully next month it's a little bit easier. But guys, with that being said, let's jump into the watch list. So I did change out Aflac for Visa. I might put it back. It's one of those things that neither one of them are at a good price right now. I wouldn't buy either one of them right now. I'm still looking at Visa, but I've always loved insurance. I've owned Aflac in the past. I owned 180 shares, and I sold it at a profit at around 11,000. So I sold it around $63 a share, and I made money on it last year. So it's just one of those that I've owned before. Kroger could be in that as well. Some of the stocks that I owned prior to really filming, I bought low and I sold high, which is what you're supposed to do. But I've been trying to do more of a buy and hold strategy. To be honest with you, I mean, Aflac checks all the boxes that Visa does. It's not as profitable, as in it doesn't bring in as much money, but the payout ratio is just as good. The dividend growth is a little bit slower as of last year, but before it was like a double digit rate like Visa's done. But the big difference is Visa's only done it for, I'll give it, say, 20 years. I think it's like 16 or 17 years. But Aflac's done it for over 25 years. I believe it's over 3 decades. I think it's like 31 to 35 years now. So Aflac actually has a longer track record and had a comparable dividend growth rate. The reason that I sold Aflac and switched it was simply because I felt it was overvalued. So just like right now, I'm not going to be purchasing it at these prices, but the the thing is, I sold this at about $11,000, and as of right now, I believe T Rowe price is less than what I had. Yep. So I would have been in the same boat. It's just, here's the thing, guys. When I sold Aflac, I felt it was overpriced, and I still think it is. But as of right now, T Rowe price is, even at the price I have it at, right? It still had more upside than what I sold Aflac at, and the dividend's actually better. So if you look, we can actually take a look. So my last dividend payment from Aflac was 180 shares. Now it's 41 cents a share. So times 180 shares would be another $1.80. So I'd be making, like, say, give them like $74 per share. Well, now with about the same amount of capital and more upside in T Rowe price, the last dividend I got from T Rowe was, um, sorry, I'll show you guys. Dividends was 122 bucks. So here's the thing: the money, same amount of money, because of how low of a price I got T Rowe at, I make almost double, like 1.5 times the amount of money in dividends that I made with Aflac, just because of the price difference. So I think that they're comparable. I think that Aflac's a great company. I want to add it again. I honestly, I don't think it was a mistake to sell it, because I have a better opportunity to make money, I believe, with T Rowe price. So I miss Aflac. I'm gonna add it back, but even at this current price, I think it's so at 120, say 122. The high is 135. So I'm at the current price, I still had more upside with T Rowe price and a higher dividend. So I make 1.5 times the money in dividends that I made with Aflac. Plus, I have about the same upside as my average costs with Aflac. And now that T Rowe price is lower, it's actually going to be an even better return. So I think the switch made sense at the time and still does. But if Aflac drops to like 60, so like drops by $10, I'll put money in it. But as of right now, I'm just gonna chill and focus on T Rowe price. So love Aflac, love insurance. I've done a lot of investing in insurance and a lot of research into insurance companies. And I think that Aflac, I like Travelers. I've looked into Allstate. I didn't like Allstate as much. But if I were to rank them, I like Aflac the best, then Chubb, then Travelers. So Aflac by far for me is the best one out of the ones I've looked at. So I will be adding Aflac relatively soon when the price makes sense. But guys, closing the day at 50,600 bucks, happy with that, right? I'm happy to stay above 50k. If something drops drastically more than what T Rowe price is at, I'll consider putting money into that. Hopefully, I know the Berkshire meeting is coming up next weekend, and hopefully by the end of the year, I'm a Berkshire shareholder, because you get 4 free passes to go to the meeting. So I'm excited about that, guys, and I will update you on. I leave Friday, so I probably will not be recording on Friday this week, simply because I'm going to be going to the meeting that day. So I'm going to work with my clients on Friday, and then I'm going to be heading out to the Berkshire meeting. So with that being said, guys, I'm super excited for the meeting, and I will I'll try to record a video. We'll see. I might be too busy over the weekend just because it's a huge weekend for me. And I'm super excited. But with that being said, guys, hopefully everybody made some money in the market today. If you enjoyed the videos, make sure you hit the like button on the video and hit subscribe so you don't miss any future updates. Thank you guys so much for watching, and I will see you guys tomorrow with another Robinhood portfolio update. Take care.